Welcome, friends, to the Probate Nation. I am Richard Ruddy. Our show this evening is about how to properly prepare the Virginia estate account. This document is filed annually with the Commissioner of Accounts and imposes a stricter level of detail than you otherwise had to do when you filed the inventory. For the first time, there is the need to document every penny received and dispersed. I mentioned in our show on the estate inventory a famous golf expression called the mulligan. This golf expression is named after a locker room attendant named, as you might expect, Johnny Buddy Mulligan, who was known for replaying his golf shots, particularly on the first tee. Our experience is that you will get fewer do-over opportunities for the estate account. In fact, if anything can derail your probate train journey more quickly, including getting you booted off the probate train, it is failing to properly account to the commissioner. So, the goal of this show is to educate you how to prepare that account properly the first time. And to lead this discussion, we are pleased to have Tim Grinnings with us from Grinnings & Low to walk us through the preparation of the account. Let me tell you a little bit about Tim. Tim is co-founder of Grinnings & Low, LLC, a Fairfax City accounting firm that specializes in Virginia inventory and accounting filings submitted to Virginia Commissioners of Accounts for estates, trusts, and conservatorships. Prior to forming Grinnings & Low, he worked for several years as an auditor for the Fairfax County Commissioner of Accounts. Please welcome Tim Grinnings. Hi, Tim.
Thank you,
Good
Richard.
to see you again.
Hey, good to see you too. Thanks for having me.
You bet. Thanks so much for helping me prepare for this particular show. Let's move quickly to the estate account form for just a moment and take a look at the top part of that account form. And again, you know, apart from info about yourself, I mean, as the executor, all the other information I think someone would need is going to be on that certificate of qualification that you got when you qualified at the local probate office. Tell me a little bit about the purpose of the account form to be filed by an executor.
So the purpose of the account form is just so that the executor can report what they've done with the assets that they are in charge of. So everything that they've listed on the inventory, they then have to report what happened with those assets. And that's the purpose of this form.
Now, do the receipts and disbursements reported on the account need to be supported by a statement showing where they got the value?
So the receipts and the disbursements do need to be supported. Everything that you report on the account form is going to need to be substantiated in some fashion.
Okay. Now, I want to point out to folks as we continue to look at the top of that form that for the first account, it's a little bit different. You have to report from the date of death of the decedent. So if you decide not to qualify for 12 months and you continue to have things charged against dad's or mom's checking account that occur automatically, all of that activity is going to have to be reported on that account form. Just to call your attention to that. So be prepared for that. You're going to have to document that as well. So the estate account form seems to be a relatively simple form, and essentially there's 8 lines to be completed. There's 2 lines that total that have to be equal. What could go wrong? Well,
there's quite a bit that can go wrong.
What we want to do tonight is show you exactly how to properly report every receipt and disbursement on the account. So let's give Tim the opportunity to teach us how to put this account together properly so it passes muster with the auditors. So we're going to begin with line 1, what is reported here on line 1? What are these opening assets, Tim?
So the beginning assets are, if you're preparing your first accounting, it's going to be the assets that you listed on parts 1 and 3 from the inventory. And if it is a second or third subsequent accounting, it'll be the same assets that you had as your assets on hand from the previous accounting.
So let's begin this sort of discipline. Is there any supporting documentation required for the assets reported on line 1?
This is the only line where you do not have to provide any documentation, because if you are getting the assets figure from the inventory, then the inventory's already been approved. And if you're getting the beginning assets from the prior accounting, then those figures have already been approved.
Okay.
So this is one line where you don't have to provide any supporting documents.
All right, so we're going to look at receipts now. Are receipts the same as income?
No, they're not the same as taxable income because you can have things like refund checks, reimbursements to the estate that will be reported as receipts, which would not be considered taxable income. So you can't just pull that receipts total and then plug it into your tax return. That would not end well.
This is so true. Should the executor compile a separate sheet that itemizes each interest receipt deposited into a bank account, for instance?
Yeah, definitely. So for each one of these lines that you see on the accounting form, there's going to be a separate sheet where you itemize every transaction that occurred that totals each of those lines. So receipts would be no different. You would go through the bank statements, record each one of the receipts that you see, and then make a list, and then attach that to the account form.
Okay, so if I have a bank account at United Bank, for instance, then I would just take and list all of the receipts at a United Bank, and I have to list them by month, right? In other words,
Correct.
everything that happened in month January, February. I mean, I got to go down and date the date it was received and all that detail. Is that right?
Absolutely. Yep. Everything that you receive has to be recorded as a receipt, and you list it separately on an itemization schedule of receipts.
So that's what I think one of the things up on the screen there should show. That is, it shows receipts of interest. How about the brokerage account? So I get interest, I get dividends, I might have some quote capital gains.
Right.
The receipts, how does that get reported?
So those would go on your itemized list of receipts as well. You would just separate it by statement. And then if you have reinvestments, there's going to be another entry that you want to keep track of, which is the number of shares that you're reinvesting in that asset.
Okay. Yeah, that actually can become somewhat complicated.
Definitely.
Should the executor compile a separate sheet? So if I have a retirement account with interest and dividends and capital, do I have to itemize that as well?
Absolutely. Yep. Any receipts you receive into any account, you're going to want to include in your itemized schedule of receipts.
Okay. All right. All right. So we take care of that. So I think we show up on our screen here what those receipts, how they would look like if you were going to itemize those on that separate sheet that would be attached to the account form.
Right.
So what kind of documentation do I have 12 months of bank statements and I might only have interest for 3 months. Do I need to give you all 12 months of the bank statements?
Yeah, it's good to submit the complete package of all statements because at the end of the day, you're going to be submitting documentation to support all of the transactions. So even if you don't have receipts in one of the statements, you could have disbursements or gain, something else. So it's good to just give the complete set.
Okay. Okay, well, that's good to know. So I think we showed up on screen what it would look like and how you would prepare that. So again, you break it down by account, by asset. So bank account A, bank account B, brokerage account A, retirement account A, and so on. Let's go to line 3. So line 1, we've got that. Line 2, we have receipts. Line 3, gain on asset sales. So what type of things get reported here, Tim?
So the gains on asset sales is going to be anytime you sell an asset and the proceeds from the sale are greater than the basis in that asset. So if you listed a car on the inventory and you valued the car at $1,000 and you were able to sell it for $5,000, you would report a gain on the asset sale of $4,000 there. And you can see sales of homes, sales of stock, sale of any sort of tangible property, that would be reported here on line 3.
Now, the confusing thing is, though, when we talk about gains, we're not necessarily talking about gains that are taxable necessarily, right? Because the way you're calculating the gain is based upon what you reported the value of that asset on the inventory. Is that right?
Right. So the basis for calculating the gain is going to be the inventory value.
Which I think they refer to that as the carrying value. That's what
Right, the carrying value.
And so, okay, so I wanted to make sure we do that. So what type of documentation am I going to have to provide the commissioner's office when I report gains on stocks and bonds or on the real estate sales and stuff like that?
So if you sold stock, all you'll need to do is submit the brokerage statement. If you sell a house, a copy of the HUD-1 document. If you sold a car, you'll want to submit a copy of the bill of sale. That's pretty much all you're going to need to substantiate a gain.
Okay. So I think we probably have shown up on screen, how you would actually lay that out in the separate statement to show the gains that would go on line 3. So let's go to line 4. Line 4 has always been a little bit of a mystery to me because it seems like a catch-all place to kind of fix all those things that need to be fixed because it's called
Right.
adjustments. But what goes on line 4? Just articulate that for us, would you please?
So line 4 for adjustments, you can have donations, you could have newly discovered assets, you can revalue an asset. So if you place the value of an asset on the inventory and you find out that it's actually incorrect, you can make an adjustment to the value of that asset. And you can also have negative adjustments, which none of the other lines on the accounting form can be negative except the adjustments line. And that'll be from if you're donating or if you're making negative adjustments to the value of an asset.
So again, like everything else on this account form except for line 1, we need some sort of supporting documentation to show how we came to come out that adjustment. Now, are market fluctuations in value reflected in line 4 in any way?
No, it's never appropriate to make a market value adjustment
Okay.
on the estate accounting form.
All right, so line 5, we add that up and gets the total, and we're hopeful that when we get to line 10 that they equal, so that's the goal. So let's go and take a
Right.
look at line 6 as we begin to talk about stuff that comes out of the account. So line 6 deals with disbursements. So tell us,
Right.
This is the reporting line for what kind of stuff? What are we reporting here?
So the disbursements, you can just think of it as all of the expenses that you've paid as executor for the debts of the estate. So if the decedent had debts and you're paying for those debts, then that would be listed as a disbursement. Any expenses that the estate incurs, that'll be listed here.
Okay, so again, we're talking a lot of times these expenses are coming out of the estate checking account. So talk a
Right.
little bit about the importance of selecting, about setting up an estate checking account at a bank that will produce documentation that we're going to need for the account.
Right. So when you select a bank for the estate checking account, you want to make sure that you can get copies of the canceled checks attached to the statement. You also want to make sure that that you can actually log in and do online banking simply and easily so that you have easy access to monitor that account.
So, and as we list these, so if I have a bank account, then I would take that bank account and list every type of deduction that came out of that account. And that could be like bank charges just for administration costs. We've got to pick that up too, is that right?
Correct. Yep.
And the same thing with,
Anytime money's coming out.
and for the brokerage accounts, a lot of people forget that there's also maybe a brokerage fee of some kind that's being charged quarterly that may only appear 4 times a year. So they have to be careful to take a look at those types of charges as well and get those picked up. Is that true?
Definitely.
Okay.
You want to include the brokerage statement as well when you're submitting documentation to substantiate those disbursements. You want to include the copy of the brokerage statement where it shows, the quarterly fee.
Okay. Because sometimes you'll have a broker that statement they'll write checks as well. So you need to
Right.
track that down as well. Now,
Definitely.
why must the purpose of each disbursement be stated? Is that important?
Yeah, it is, because as an auditor, when you're looking through the list of expenses and the list of checks, if you don't list what the expense was for, then the auditor is not going to know what the expense was for. They're going to see a check that was written to John Smith, and they're not going to know that John Smith was mowing the grass at the estate's home. So, it's important to make sure that the auditor just wants to know that it's a valid estate expense.
Okay. All right, let's take a look at line 7 then. We're talking about losses on estate assets. So what are some of the typical losses that might be reported here on line 7?
So the typical losses are going to be, if you, same as the gains. If you sold a house if you sold a car, if you sold stock, and if the proceeds are less than either the inventory value or the carrying value of that asset, then it's going to generate a loss here. And you would
Okay.
report that on this line.
Okay. And again, you'd have to have some documentation to support that loss?
Right. So if you sold stock, you would simply submit a copy of the brokerage statement. If you sold a house, a copy of the HUD-1. And if you sold a car, then a bill of sale would be sufficient.
Okay. All right, so let's take a look and talk about distributions.
Okay.
At the end of the day, that's what it's all about. We want to get to the end
Right.
of the probate train ride and give this money to the heirs of law, and the heirs are beneficiaries. So tell me a little bit about what goes on line 8 to distribution. We're going to show a PowerPoint there, but what would be going on this line?
So line 8 is going to be the sum of the distributions that you as executor have given to the beneficiaries, and that could be in the form of cash, that could be in the form of stock, that could be, portions of real estate or automobiles, tangible property. So just the sum of all of the distributions to the beneficiaries is what's going to go on this line.
Okay. Now, what type of documentation do we need to have here in order to pass muster with the auditors?
So if it's a cash distribution, you could submit a copy of the canceled check. Ideally, in addition to that, what you want is a signed statement of receipt. It has to be an original signature. They won't accept copies. They want to make sure that those beneficiaries received what you're saying they received.
Okay. And again, this is another example, though, of why we want to make sure the bank will produce checks for us that show that it's been paid. But the signed receipt is another way in which to deal with that, right? You get a signed receipt
Correct.
saying I received this check or that check and this cash or that cash. Or tangible personal property as well.
Right.
That might be coming through. All right, distributions. They're original signatures. Now I know there's some situations where it's not possible to get original signatures. We had some people down in South America in the mountains someplace, and nobody had, internet.
Oh my goodness.
We had to get copies, and the commissioner was very kind to allow us to accept that in that circumstance. Let's talk about, we've gone through line 6, 7, 8, and now we're at line 9. Okay, so I've received money, I've dispersed money, I've sold assets, had some additional assets that were discovered. Now I'm going to report on this, what assets I have left. So tell me what goes on line 9.
So line 9 is going to be your assets on hand, and you're going to create an itemized schedule showing, this is how much checking account we have got left. This is how much in the brokerage account we have left. We still have, 2 cars left. We haven't distributed those yet. So it's going to be the total of all of the assets that remain. And it's going to be listed at the carrying value of those assets.
So whatever we had reported on the inventory, or however we've stated it previously in prior accountings as its cost basis or carrying value, that's what we show there. Now,
Correct.
I know that in line 10, there's a spot to the where we actually can list the fair market value of all the assets. Do I need to also provide that information?
Yes, you do, because there's 3 things that are calculated based on that. It's the commissioner's filing fees, the bond, and most importantly, the executor fiduciary compensation.
Okay. So yeah, you'd have a separate schedule for a bank account that shows its carrying value, and then we have a separate sort of fair market value. Brokerage account would be cost-based carrying value, then fair market value, and same thing with
Right.
real estate.
Mm-hmm.
So we keep those totals there. That's good to know. And then what kind of documentation do I have to support each one of those values with some sort of statement that shows it on in my file?
Yeah, definitely. You just want to submit the bank statement, the brokerage statement that confirms the values and the number of shares. If it's brokerage statement, they'll verify the number of shares. The auditors will. They'll verify the number of shares and the market value that you report.
Okay, so our goal here is that when we add up the lines, the total for line 10, that equals line 5.
Yeah.
Okay, so if it doesn't
It doesn't
equal,
always work out that way.
it doesn't
Richard,
equal
but
that, then we
it
have to go
should.
back and do some detective work.
Yeah, and don't just make an adjustment.
So line 4 is not used to fix an imbalance, is that correct?
Right.
So that's important. So tell me some of the common, issues that you see with filed accounts that prevent approval by the Commissioner of Accounts.
Yeah, so most commonly, it's just a lack of adequate supporting documentation. Also, fiduciaries will, they'll start the accounting as of the date of their qualification, which doesn't actually work out because the account will never balance because they're leaving out the transactions that occurred from the date of death up until their date of qualification. So that's, we already touched on that, but that's something that we commonly see. And we also see, reporting market value fluctuations. And in addition to that, recording transfers. So if you are moving money from the estate savings account to the estate checking account, that's not a disbursement out of the savings account and a receipt into the checking account. It's just a wash transaction. You're just moving an equal value of assets from one account to the other account. And you actually don't report the transfers. It works itself out in reporting the carrying value of the asset on hand on line 9.
So we talked a little bit about some of the things that might prevent the account from being approved. So as we get into the second accounting or third accounting, does the amount of the bond have any impact? In other words, if we have a bond for $1 million and now we show assets that are worth $1.5 million, will that bond increase need to be taken care of before the accounting can be approved?
I believe the bond will need to be fixed prior to approval of the account.
And again, I think for our viewers, the bond could be one that involves a surety with an insurance company, or it could be a bond that's personal, okay? The issue remains the same no matter what. There is a process to get that fixed. Well, I think we're at that point, Tim, where we want to kind of get your final thoughts and suggestions about things people should do and people should try to avoid doing in order to make that accounting be good to go and ready for approval when they submit it.
Yeah, so the best advice that I can give to any fiduciary is to get organized and stay organized. If you don't have all of the documentation that you need to prepare the accounting, you're not going to be able to prepare it in a way that will be approvable. And even if you want to hire somebody else to prepare it, if you don't have the documentation, they're not going to be able to help you. So before you even start the process of trying to prepare one of these accountings, you need to make sure that you have all of the monthly statements that you need, all of the brokerage statements, and then proceed into preparing the accounting. But I would not recommend starting before you're sure that you have all of the statements necessary. And that's the best advice that I can give is to stay organized and stay on top of things.
And if they file the accounting and the commissioners, writes them what they call the exception letter saying we have a problem with this or a problem with that, should they ignore that or should they take that seriously?
Definitely take it seriously. The auditors are, for the most part, very helpful. They want to get the accounting approved, so they'll send you a letter, point out the things that you may have missed or messed up, and then they'll give you an opportunity to address that and fix those issues. And as long as you're working with them, that's what they want. If you ignore them, then you may end up with the sheriff knocking at your door, and nobody wants that. So it's always best to respond to the auditor and work with them to get the issues fixed.
I think it's probably true for all of the commissioners that they do really truly want to help the public get this done. But Definitely. they don't, it's nothing personal, but they do have to follow certain rules, and they do report to the chief judge of their jurisdiction. So while they may understand your dilemma, the fact of the matter is that things have to be done a certain way. And if they're not, then they have to get someone in charge who can do it. So don't ignore it. Mulligans are available, but the patience of the commissioners can be worn pretty thin if you don't respond. So,
That's right.
Tim, I want to thank you so much for taking the time to chat with us about this, help us work through the account form. This is probably one of the forms that gets people in the most trouble, okay, because they just don't do it correctly and somehow think that the rules that govern everybody else does not apply to them, okay? I thank you for taking the time to walk us through, help explain this to people, educate folks, and I think a lot of folks are going to do a much better job preparing their accountings because of your time here today. Thank you again.
Sure thing, Richard. It was a pleasure being with you. I appreciate it.
Thank you. You know, for those inclined to prepare the estate account on your own, I think this show will provide you with some great guidance on how to do it properly. But as Tim pointed out in his closing remarks, and I want to stress, one of the key responsibilities of the Commissioner of Accounts Office is to trust you but verify what you've done. So do not ignore a letter from the Commissioner's Office telling you of an error on the account or a need for supporting documentation. There are no mulligans for folks who are silent. If your silence continues, you may end up escorted off the probate train. If you find yourself baffled as to how to respond to the Commissioner, reach out to your estate attorney or accountant for guidance. You will be well served, and the Commissioner's Office will appreciate your diligence. Friends, this brings us to the conclusion of our show. I hope you found it helpful. Replays of shows can be viewed on the Probate Nation website and our YouTube channel. Again, thank you for visiting with us, and until next time, good luck on your probate journey.